Hello traders and welcome to my video on the average volume indicator. I'm going to show you in this video how you can capture moves such as this one for over 270 pips and counting. Okay, so the average volumes indicator, you can see I have it here on my chart. I am using the MT4 trading platform. This is a US dollar Swiss franc 1 hour chart. You can use this indicator on any trading instrument, Forex, crypto stocks, commodities, indices, etc., and any chart time frame. Personally, I like to stick to the 1 hour, 4 hour, daily, weekly, and monthly long-term charts, simply because they contain more price data, and thus I find the signals tend to be much more reliable. Okay, so the average volumes indicator, what it's going to do is going to show us how much volume there is in the market, which we can use to gauge momentum. We're going to be trend trading, so we want there to be good momentum on trends. This indicator will help tell us that. And also you can see that this differs from the standard volumes indicator because we have the moving average line here, which is a way to gauge the average of the volume over the set periods. I'm using the default periods on this indicator here. Okay, so the first thing we're going to do is we're going to look for a trend. Your trend is your friend, and I'm going to do that by identifying my support levels and my resistance levels here. Okay, I'm going to wait to see what price does after it's been within this zone here. We have a nice breakout to the upside, pull back to this support level here, and an upwards trend. Let me just zoom out to show you. Okay, so the trend did start all the way back here. The market started to make the higher lows, higher low, higher low, higher low, higher low. So really, we could have been looking to get in anywhere from around here. I mean, if we just take this resistance, you don't always need to draw your resistance horizontally. You can always mark it like this. So we had this resistance tested there, almost here, here. So we know this is a strong resistance level. This is our trend line upwards. Price starts consolidating around here, and we're going to look for a breakout to the upside. Okay, and you can see from that big bar there was no coincidence. A few traders were watching this, and it caused good momentum to the upside. We had the breakout, and then the trend continued upwards. Okay, so we could have got in on that breakout. The interesting thing about that trade is we didn't even need this average volumes indicator. I do say in most of my videos that I don't rely on technical indicators. I'm more of a price action, support and resistance trader, and candlestick patterns. I like to look at what price is telling me now, not what maybe a lagging indicator or a repainting indicator is telling me in hindsight. That being said, you can always use indicators for additional confirmation if you like. In terms of money management, if we did trade this breakout trade here, I would have put my stop loss just below the low. And then as price creeped up, I just moved my stop loss below the lows, locking in the trade, locking in profit, then up here. Okay, so as price continues upwards, just moving the stop loss below the lows, locking in as much profit as possible until we're either taken out of the trade when the price turns around or we decide to close our position. Okay, when you're locking in profit on the way up, you can also close part of the position if you wish. For example, close a quarter of the position here, another quarter here, and so on and so forth. Otherwise, we can just let the whole position run and just maximize the trade as much as possible. Okay, once price came up to here, you can see this level of resistance, triple top candlestick formation there. We probably would have been looking to exit. Okay, got a wedge formation there as well. So the signs would have been, you could have been closing out your position there, if not earlier here where the market started to make these lower highs. Okay, but anyway, I've gone off track a bit. It would be rude for me not to mention these things. So let's get back to the average volumes indicator here. So how would I use this? Basically, as we're trend trading, I'd be looking for there to be volume. I mean, you can see these green bars. When the green bars are increasing, it means that there is an increasing amount of volume. When the bars turn red and decrease, the volume is also decreasing. Okay, it's as simple as that. We also have the moving average line here. You can say that when the volume is above the moving average line, it can signify a greater volume. For example, if you look at this big candlestick here and how high up the bar is on the average volumes indicator there, it's because there's a lot of trading volume. So I'd use the indicator probably to avoid trading after bars such as that, because you don't want to be buying at the high. Okay, so if I'm thinking about a trade and the volumes indicator is already maxed out up here somewhere, I'm going to perhaps just, avoid trading in that scenario. But they can be good for spotting pullbacks. Okay, so when we have this uptrend here, you can see this pullback. Okay, this would have been a potential, this pullback here. We may have looked to buy into this uptrend. Okay, on that pullback, and this is the volumes indicator. You can see when the volume dropped, okay, is when the pullback occurred. Okay, so we could have waited for the drop and then waited for it to cross back above the moving average line. So around here somewhere, here or here, we have this hammer candlestick pattern as well. Okay, we can see that this support level's held up nicely. We can look to enter either around here based on the crossover of the average volumes indicator, or we could wait for a breakout. Could have entered this breakout here, if not prior breakout around here using this wedge or ascending channel formation. Ample opportunities to enter in on this trend. Again, we can see a pullback on the chart there. We can look at the volumes indicator. We can see the volume has dropped. Okay, you can wait for a cross. You ideally want the moving average line to be trending upwards as well. So if we have a cross of the volumes indicator when the moving average line is in an upwards trajectory, so that's around here somewhere. This could have been an entry opportunity. Confirmed. I don't take technical indicator signals as they are. I'm not just going to see that and enter the crossover blindly. I'm going to first look at my support and resistance areas. So it's a nice area of support here. You've got some indecision as shown by these candlestick patterns, spinning tops. Okay. And then you do have this nice bullish breakout here to the upside. Okay. The good thing about this trade is you wouldn't need to necessarily take the crossover immediately. As I said, I wouldn't rely solely on technical indicators. So if you can just say, okay, the average volumes indicator has gone above the moving average, it's green, there's momentum in this trend, I'm going to now look to time my entry based on a candlestick formation or breakout of resistance or support, which we could have done here. Would have been a good trade. Get us in on this move again. Okay, so there's ample opportunities to capture this trend on the way up. Okay, you've also got this level of resistance here, breakout here, and could have got into some of this move there, but ideally we want to get in as early as possible. We don't want to buy too high. There's ample opportunity down and around here to have entered in on this trade. So the average volumes indicator, let's just have a look. So from the breakout there, you can see lots of volume. It's above the moving average. Moving average is an upwards trajectory, so that gives us confirmation of that signal there. Okay, same with this breakout. You can see the moving average is an upwards trajectory. Nice green crossover there. We could have entered on that breakout. That would have been confirmation. Even the crossover here, had we waited for the MA to turn up, the green to go above, could have traded off that support level. There's actually nice trend line there, the market making higher lows. Yeah, so lots of indications of bullish momentum and plenty of opportunities to trade. Okay. I mean, we can even take it as far back as this. You probably wouldn't want to trade before watching the trend break out, but you can see that even around here, as the indicator crossed up, green bars, there were strong level of support had formed there. You could have looked to buy bought as early as there, but I would have probably waited for the breakout because there was a chance that the market could have just consolidated here and even continued in a downwards direction. Okay, so you can also look for divergence as well. When you start to see the moving average make lower lows, the market might be falling. If it makes higher highs, the market might be increasing. Okay, so ample opportunities to capture moves on this trend. Let's have a look at another one. If we go back, it's a nice downtrend there. Okay. What situation do we have here? So we have a breakout to the downside from there, price moving away from the support, wedge pattern forming, almost an M pattern, breakout to the downside. This support then becomes resistance. We could have traded on the breakout there. Okay, if not even earlier up here, you can see strong level of support, price stuck in this channel, nice breakout to the downside. You've got the inverted hammer there formation, nice bearish price action. You can see the market's making lower lows, lower highs, and a good breakout there. If we go to the volumes, indicator is increasing in volume, so there's strong momentum in the move. We had the crossover of the green there showing an increase in volume, and also the MA pointing in an upwards direction. So could have looked to have traded on the breakout there. Okay, you can see when the market's flat like this, indecision, the volume is low. Okay, so if you're range trading, that might be what you're looking for. You could be taking, trying to pick off the tops and the bottoms, drawing a range. I'm trend trading, so what I'm looking for is nice volume to capture, to time my entry into a trend. So once we've seen this trend form, oops, didn't mean to do that, but that does actually work. Wanted to just draw a trend line. Once we see this downtrend, then we can just be, you could have traded that breakout there. Didn't even need any indicators to tell us that, just pure price action. This support level, breakout, support becomes resistance. Good confirmation, easy trade there. Same there, just a breakout of this ledge. Okay, all the way down, strong level of support, multiple times, and a breakout. It's no coincidence you have these big bars around the breakouts. Traders are watching them, waiting for the pullback in trend and the breakout, really. And that's it. And then once you see price start to get further away, the longer the trend's been going on, you don't want to end up selling too low. Okay, but and again, when you have these really, really long bars, you can avoid selling just so you don't sell at the low. Okay, at the low point, ideally you want to sell up around the pullback somewhere, up here somewhere on the breakout of the pullback. Nice level of resistance there. Price stuck in a channel, breakout to the downside. Even more shorter term, got a nice wedge pattern here. Price is trapped, nice fall down. Volume increasing. Okay, green above the blue line. So yeah, we could use the average volumes indicator to look for pullbacks. I mean, if you look at the indicator, you can see when it's low is usually when the pullback occurs on the chart. Okay, so once you've established a trend, if you don't need the indicator to tell you that, you can just look at the chart and see a pullback. Okay, but you can if you want, if you like fancy indicators, you can see, okay, there's a gap there, the volume's low. Now I might start looking to time my entry into this trend. Same there, volume's low. I might start looking to time my entry into the trend, but don't just blindly trade based on technical indicators. Use support and resistance trend lines. Candlestick patterns for time and entry, and as always, have good money management. For example, if we had taken this breakout trade here, we could have put our stop loss above this recent high, which only would have been around 15 pips, which is relatively tight for the 1 hour chart time frame. And as price drops, we could have trailed our stop loss above the highs all the way down. Okay, just locking in as much profit as possible, arguably all the way down to here. And yeah, we we maximize the move as much as possible. So, that's over 200 pips in the space of a couple of weeks. And even if, we were wrong with our trade and our 15 pip stop loss is taken multiple times, when we do eventually get it right and we capture a big trend like this, we can make back our losses and a lot more as well. It's just emphasizing the importance of good money management. Okay, well, just I can see an obvious trade there. Price was still falling, lower lows, lower highs. Nice level of support formed, the M pattern formation as well, and a break up to the downside. You wouldn't have been late to the party even down here. The average volumes indicator as well gave us a confirmation is pointing upwards. It's telling us there's volume, increasing volume, green above the blue. Nice breakout trade to the downside there. Okay, and you're not selling here because you're going to be selling right at the low. The blue line is moving averages facing down and the volume is low. Okay. There you go. Hopefully you found something useful in this video. I appreciate you watching. If you could please like and subscribe, that would be great. And I hope to catch you on the next one.